There is something going on because billionaire investors are selling their shares left and right. Do they know something that we don't know? Is there a stock market crash around the corner? And most importantly, should we look to sell too? Let's go ahead and break it down. Now, in February, we saw major transactions from CEOs like Jamie Dimon, the CEO of JP Morgan Chase, and tech companies like Mark Zuckerberg, he owns Meta, and Jeff Bezos, was the largest shareholder of Amazon. And it is not necessarily pretty. So for example, Jamie Dimon sold $150 million worth of stock. And here's the thing that really stood out to me. He's been the head of that company for 18 years. How many times has he ever sold shares in his own company? Zero. He has never, ever sold until now. Then you move over to Mark Zuckerberg. He sold $428 million worth of stock in Meta. And I think he did this in like 9 days. So he was selling really quickly here. And then you've got, and I'm gonna call him for the purposes of this number here, Big Daddy Jeff Bezos. Okay. He sold $8 billion worth of Amazon. $8 billion. That is a crazy amount. But what is going on here, right? Is there something that we can glean from these people starting to sell off their shares? We also saw major politicians start to sell too. Tommy Tuberville, the senator from Alabama, he sold off a lot of his tech stocks too. So what's going on here? Well, here's the thing. It is important to know when a lot of these people sell, particularly the CEOs. They run the company. They are the true insiders when they buy and when they sell. However, I got to be upfront with you. There's a lot of reasons why somebody would sell. Yeah, it could be, hey, let me hop out of this thing before things get worse. We did see this right before the pandemic. We saw major politicians sell, and we saw CEOs sell and step down. Bob Iger stepped down the first quarter of 2020 before the pandemic got crazy. He said, look, hey, I'm out of this. Somebody else take over. Everything fell apart, and then he came back after things got a bit better. So there could be something to it. But here's the thing I know for a fact, okay? It's only one reason why you buy. That is the thing I'm truly focused on, because you only buy when you think something is going to go well, when you think something is going to go up. And this is something that we saw with the Starbucks CEO a few years ago and several other companies in between. And all this information is public, but they sold, right? The market was up. What can we glean from it? Okay, I wrote down about 3 to 4 reasons as to why. Before we get to those, make sure that you sign up for my free course on how you can create your 6-figure investing plan. Figuring out how and where to buy is one of the most important things for an investor, and knowing where these people are buying and selling is a part of that plan, or can be a part of your plan as well. It's been one of my secrets to success, so you want to make sure that you sign up for the course. It is 100% free. The link's right here, the link's in the bio. Now let's continue with the video. All right, so here's the thing. There are, again, about 3 or 4 major reasons as to why someone would sell. Let's start with the most mundane reason, the one that we shouldn't be as concerned about, is diversification. Okay, yes, you are a multi-billionaire in the case of Bezos and Zuckerberg, and even Jamie Dimon, he's worth $2 billion, so says Google, that you might want to diversify. You don't want all your money in one basket. Even these billionaires do need to diversify a bit of their money. The most important thing for people like me and you is if you work at a company and you get shares, you don't want to have all of your money there either, okay? Now, depending on what your personal financial advisor and your tax person does tell you, usually it is normal to sell off a portion every year or so, because again, it's great when the market is up. It is amazing when the market is up, but when it's down, you don't want to have all your money tied up in that one company. And you think that, hey, I work here, I know all the ins and outs. We have an overconfidence there, especially if you're just a typical employee. We don't know all of the things that's going on in the company. So yes, it is normal for people to sell. Y'all know my rule, 5% in any one company. Once I get, a company like Nvidia that I did sell portions of, I didn't sell it all, is, hey, I had 5% of my money in it, now it's 10. Let me bring this down just a little bit, take my gains, enjoy it, put it in other places, invest in index funds so I don't overweight myself there and get in trouble should that company not do well. So that's diversification. They should sell portions of their money, and that is completely normal, not something to be alarmed about. The other thing that you might want to know about is this. It's taking gains. If a stock has had a run, take some money off the table. Take the win, okay? Take the win, put it in the bank, go invest in other things. Say, look, I made money. I'm gonna take a little of this off the table and not wait for the stock to fall and then try and panic sell at the very last minute. Nvidia, we talked about that one a bunch of times, but most importantly for this video, right? Amazon was up 90% last year. 90%. why not sell just a little bit off the top? Okay, in an instance like that, I think Meta was up 100. I actually wrote this down. Meta was up 171%, but over the last year. Hey, you might want to take your gains too. Okay, especially again, you're not selling it all. You're taking just a little bit. They're doing whatever they're going to do with the money, and hopefully the company continues to grow. That's normal. I tweeted this the other day. You should take your gains, especially after a major gain like this. We did a video about a year or two ago when Apple was up big, and I told you, hey, I'm selling Apple. People panicked. I said, hey, I'm not selling it all, but it's up. Let me take some of my money off the table and let Apple continue to grow if it is the stock that I think it is. But I'm going to take some of this money and enjoy it now, right? Or I'm going to take it and diversify. So those two reasons, hey, that's not the worst thing in the world, nothing to be alarmed about. But there are two other things that do happen and you should be also aware about as an individual investor, and that is taxes. Now, they have tax bills that are different than our tax bills, okay? You can look at that whatever way you want, but in about, 30 days or so, we're going to run into the tax deadline of April 15th. If you know you got a tax bill and you might not have all the cash on hand or you don't want to come up out your pocket, you might sell a portion of your assets. Now, again, for them, right, their financial plan, their assets are way different than ours, right? But you can do that. You can just say, hey, look, I know I got a tax bill coming up in a month. Let me go ahead and sell now. You might not want to sell a day before the tax day, right? Because the stock could be lower that day. And you might want to take it off the table now, put it wherever you need to put it, and then pay the tax bill when it comes. That's nothing to be worried about. Okay, that can happen, right? And then you have, obviously, the biggest thing is they're avoiding something major. They know something that says, hey, market's at an all-time high. I'm going to go ahead and sell, let the market crash, and I'm not going to really deal with that. I'm going to protect myself from it. That is where most people draw their attention to. Here's the reason why I don't think that's the case. They really didn't sell that much. They really didn't. Now, $8 billion is a lot to me and you, okay? $428 million is a lot to me and you. $150 million, which is the lowest number on this list, which is crazy, is a lot to me and you. But did you take the time to realize that that's only 4% of Jeff Bezos' total net worth? 4%. That's not okay, right? Like that's not something to be overly concerned about. And I think he can do that, 25 more times before he exhausts his entire net worth, which again is crazy to think about. And same thing with Mark Zuckerberg, around the same thing, $428 million, that ain't nothing. His net worth is well over $100 billion with a B. Unless he started to sell 50 or 60 or 70% of that company, then I would be concerned. We also saw this with Elon Musk. Just a few years ago, he started selling major portions of Tesla as he got ready to buy Twitter at that point in time. People were panicking. The stock did fall. He was tweeting about it for whatever reason. And he used that money to buy something. These guys could be buying a basketball team or an NFL team for all we know. The Walton family, the Walmart family, they are still here and they are still very wealthy. They started to sell shares and they ended up buying a portion of the Denver Broncos. I don't know exactly the entire ownership group, but they did that. They had to sell some of those shares to pull that off. So it could just be, hey, I'm going to go buy and enjoy something. It could be taxes. It could be nothing at all. The most important thing is, when are you buying and why are you buying? Which you already know. You're only going to buy when things go up and when things are trending in the right direction. And they are going to know that because they run these companies, right? They are the CEOs. Now, this is known as insider buying, not insider trading. Now, insider trading is illegal. Okay, you don't do that. You definitely not gonna hear me talking about it because I don't want to go to jail, and I definitely will be talking about it on camera. Okay, but insider buying is something that is legal, and they have anytime that they buy, they actually have to put it out and give it to the SEC, Securities and Exchange Commission, or we can all read for free, and that is where I pay most attention to when I'm looking to buy a stock. It's one of the things that I pay attention to when I'm looking to buy a stock. And studies have shown that when they buy, if you compare the time that they bought versus just the average stock market returns, they actually make a lot more money. And again, I think that's pretty obvious too. An example here that we actually talked about is when the CEO of Starbucks bought shares. And I think this might have been 2021, early 2022. Once he started buying, the next 3 to 6 months after, the stock took off after he bought. But before, wasn't really doing anything, right? So you do absolutely want to pay attention to those. But how do you pay attention to that? How do you access the information and everything in between? You definitely want to check out this video next.